Now then, the Financial Services Regulatory Relief Act of 2006. The Act, among other things, authorized interest payments on balances held at Federal Reserve banks, increased the flexibility of the Federal Reserve to set institution reserve ratios, extended the examination cycle of certain depository institutions, reduced the reporting requirements for financial institutions related to insider lending, and expanded enforcement and removal authority of the federal banking agencies such as the FDIC. Now then, next, the Housing and Economic Recovery Act of 2008. This act focused on housing reform and included provisions addressing foreclosure prevention, community development, block grants, and housing counseling. The act established a temporary federal housing administration refinancing program called the Hope for Homeowners program. In addition, the act required the FDIC, working jointly with the other federal banking agencies, to develop and maintain a customer for registering with the nationwide mortgage licensing system and registry. Residential mortgage loan originators who are employees of depository institutions and certain subsidiaries. The Act also amended the Truth in Lending Act to expand the types of home loans subject to good faith estimate disclosures. Now then, next, Emergency Economic Stabilization Act of 2008. The Act authorizes the United States Secretary of the Treasury to spend up to $700 billion to purchase distressed assets, particularly mortgage-backed securities, and supply banks with cash. Now then, next, Helping Families Save Their Homes Act of 2009. This act contains provisions intended to prevent mortgage foreclosures and enhance mortgage credit availability with respect to the FDIC. The act lengthened the Deposit Insurance Fund Restoration Plan period to 8 years, increased the FDIC's borrowing authority to $100 billion, and expanded the FDIC's assessment authority for systematic risk actions. Now then, next, Dodd-Frank Wall Street Reform and Consumer Protection Act. The act implemented significant changes affecting the oversight and supervision of financial institutions and systematically important financial companies. It also provided the FDIC with new resolution powers for large financial companies, created a new agency, the Consumer Financial Protection Bureau, introduced for non-bank financial companies, or codified for bank holding companies, more stringent regulatory capital requirements, and set forth significant changes in the regulation of derivatives, credit ratings, corporate governance, executive compensation, and the securitization market. A more complete summary is available here at the FDIC's role and authorities under the financial reform law. It's a link at their site. Go to it, check it out. I recommend it. Good luck.